What is going on, Penny boys and gals? What is going on, stock traders? And welcome to our market review stream. Welcome to everyone listening from the Discord and watching from the YouTube. My name is MetaMatt, also known as What the Duck in the Pennybois Discord, and I'm live with Swinging Bull and Pookie's Revenge. How we doing?
Good. Nice to see you guys. Happy to close out the trading week.
Yeah,
Doing
likewise.
good, yeah.
Pookie, I know you're doing good, but I know you're not doing too good because I heard you're doing a little sick today, right?
I get an A for the week for influenza A.
There we go. So yeah, we got a lot of great stuff coming for this stream. If anyone has any questions, you can ask in the YouTube or in the Discord. We already got one from Brother D, which we're going to get right into in a second. But we will be talking about a bunch of the market news, is what we're looking at in general in the markets. Maybe possibly some live trading if we have any live trades going on during Power Hour from Pookie or Bull. But we got a bunch of interesting stuff going on in the market. We got Quad Witching Day, which is today. We'll get into what that means and how that works and what we could actually expect from it in every 3 months. So in the 3 months time. Yeah. First Republic Bank and also, of course, Silicon Valley Bank both have their fair share of insider trader drama and also just really big stock dips. And yes, a lot of lawsuits, scandals, and more we'll be getting into. But let's get into that first question. And Pookie, I'm going to go ahead and put your screen right on there, your chart.
Oh, no pressure. That's fine.
If we can look up on SPY. We got Brother D asking Max Payne 400 on SPY. Are we going to rip?
I don't know about Max Payne. There's certainly a level at 400. It's a good, strong psychological resistance. Let me actually switch over to Webull. I actually have some more in-depth levels drawn out. So the idea here was that SPY was kind of in this lull right here, right? In the grand scheme of things, this is kind of a rest area. And it really needs to decide whether it wants to go up or down from this range. If it goes above 393 and holds, yeah, I believe we could absolutely see plus 400 pretty easily. There is a lot of subversive confidence in the market right now. It's just being suppressed because nobody really wants to jump in first. And of course, if we fail to hold the lows here, 384.90, we could easily see more downside too as the panic takes hold and people panic over the banking situation, the Ukraine situation. There's all kinds of stuff. But I'm bullish medium term, but short term, there's just intraday trades and getting that choppiness out of the way. Obviously, right now is the riskiest time of the quarter to take any trades on SPY because it's the end of day, it's Friday, and it's quad witching. So I wouldn't recommend any new traders just blindly jump into stuff right now on SPY because you will probably get destroyed. And we just don't want to see that.
Oh, yeah. And you actually mentioned two very interesting points there. You're talking about the quad witching as well as the banks. So let's just get into the banks first. We'll talk about First Republic and what happened with them. I'm looking at the chart right here, trading at $23.55, a low of $17.53. It was trading at $147 a little bit over a month ago. Big hit. A lot of banks are taking hits. Obviously, Silicon Valley Bank was the first. We've done a whole bunch of talk about that one, so I'm not going to get too in deep about that. But just the banking sector in general, Pookies. I know we have Mr. Stocklot Props in the chat. He is the dead cow bounce master. He loves these stocks that get beaten down. Would you touch this with a 10-foot pole, either First Republic Bank or just any of these bank stocks in general? I remember during COVID, there was a lot of crashes. You had, all the Carnival Cruise and all those types of stocks, the airlines going down. A lot of people took a lot of great plays off of that on the bounces. Of course, they went down after the bounce. But what are you looking for as far as this goes, or even just not even looking? You're just saying, I'm good.
So I'm actually not looking at FRC short term myself. There is a defined pattern that we can follow every time we see one of these hard sell-off overreactions. First, obviously, you have to assess whether or not it's a valid reaction or an overreaction. In my opinion, this is an overreaction because a lot of the banking aren't as shaken up as the people believe. A lot of that's just the misunderstanding of how the banking system works and the protections in place after 2008 and pre the 90s and stuff like that. So I think we're actually in a pretty stable position despite the fear. Now, when it comes to the actual trade, there's the obvious initial sell-off, right? And that immediately brings an opportunity for a bounce. We know that 9 times out of 10, we typically see 25% of the length of the impulse bounces back up. So if you can get a good solid entry with a confirmation below the halfway point, which is 12.5% from the bottom, you can usually ride that up for a pretty reliable trade. But anything above that 25%, once that's resolved, that's no longer safe. So between that, let me just I'll just draw this out because it'll be more fun.
You love drawing these out, Pookie. I know you do.
Yeah.
We're in
a
for a
problem.
treat here, folks.
So basically, anytime you see an impulse, there's usually a 25% pullback. Let me get rid of these extra lines here. So I'll draw the 12.5 because that's important, 25, and then we can hide the 78.6 because we don't care about that. No offense to anyone here who enjoys the 78.6. We just don't need it. All right. So when you see a good strong impulse like this, that is a clear sell-off. Obviously, you want to not try to time the bottom unless you have experience, you can read the volume, or you can identify a level and see something of value. If you just blindly chase red candles, especially on a catalyst-based sell-off, you're probably going to lose more often than you win. So you got to be very careful. And it's okay to sacrifice the absolute bottom for a higher quality entry. Just think of it like an insurance policy. So in this case, the entry opportunity would have been here below this 12.5% level, which is 25.85. I had a good clean bounce off 17.55, and then the safe target would have been 34.16 or 25%. We know that hits 90% of the time. Anything from here to here is indecision territory, and that's no man's land. That is the riskiest place to take an entry because you got about a 50-50 mix. Certainly, trades could go up and blast above the 61.8, but more often than not, we see bearish H-shaped continuation to the downside when we see strong sell-off like this. This 50 to 61.8% range is just a measurement. It's not a defined guarantee that it's going to happen. It's just saying this is the area where there would be a healthy mix of buyers and sellers participating. That's why the 61.8% level is so critical, because it identifies the tipping point in most cases. So a lot of people buy or sell just because these levels get hit, and that's where you get burned. That is not a reliable strategy. It's always safer to wait until a level verifies, or you see that H-shaped continuation and you see lower lows. In this case, we kind of see some support forming. There was a good opportunity here for a high segmented double bottom here, but obviously it didn't push up, so there's no entry, which means we don't have to expose ourselves to risk yet. So after that bounce, right, this is kind of step one, okay? We see this 90% of the time, then it has to make a decision. So this is the indecision area, right? We typically have a 3-day rule where we just kind of let it go for a few days and see where it's going to go. In this case, it's been more than 3 days, and it hasn't broken new lows or new highs yet. It hasn't pushed off through this confirmation zone, and it hasn't failed to sustain the support level. So there's really no confidence either direction right now, which means we can't really trade anything in this range. So we have to wait for the next part, which is the longer term recovery. And your position size typically scales based on each of these phases if you're risk management oriented. But for right now, unless you're playing it really close to this bottom support here and having a tight stop loss and a nice tight target, there's really not a whole lot of longer term opportunities here just yet. So it's always just safer to wait for a higher confidence setup, in my opinion. Now, First Republic isn't really in a bad spot, but I'll let Bull talk about that, and then because I don't want to ramble about banks for too long.
Yeah, you do.
I do. But we'll wait.
What's going on, Bull? Anything you're looking at as far as the banks go, or this one is in particular?
I'm not really getting involved in any of the banking plays. I just think there's a lot of risk there, as Pookie pointed out. A lot of these banks are getting halted. You don't want to get into a position and all of a sudden it's suspended or something like that, and you're kind of at the mercy of it becoming tradable again. So I don't really have an opinion. Basically my opinion is I think there's more fallout to come. Okay, I think Silicon Valley was the start. Now we got First Republic, Signature Bank in New York is basically FDIC walked in on them as well. Probably going to assign a receiver to them. I don't think this is over. So I'm just going to sit on the sidelines with my popcorn and watch. I'm not getting involved just because of the fact that a lot of these stocks can stop trading for a period of time, and I don't want to get caught not being able to manage a position through no fault of my own, So that's my opinion on the banks. I'm kind of sitting on the sidelines because it's just too dangerous for me in my risk tolerance.
Yes,
that's the way to do it.
I'm looking at the chart here. I mean, speaking of this bank, and like you said, we're not going to be touching this one, but I think a lot of the executives, from what I've heard, were definitely touching as far as selling goes. They weren't buying it, of course, but it sounds like First Republic Bank executives sold around $12 million worth of stock before this crash, 2 months prior to the crash, actually, to be exact. So do you think it's just lucky timing, or do you think that this might be something that like might need some looking into? I believe the executive chairman, James Herbert's spokesperson, said that his sales were consistent with his annual estate planning and donations. I guess more than a fifth of the funds went to charity. As we know with FTX, just because you're a philanthropist doesn't mean that you are doing right by the people, of course. So what do you think about this? $12 million in stocks sold by insiders, basically, you know, top executives prior to this. Do you think this is just lucky timing?
No. And here's why, right? You can't have 6, 7, 8, 9 figures and chalk it up to luck, right? You're not going to be relying on luck when you have that kind of money. Unless you just got that money from playing Powerball, which, you know, only one person can do that at a time. You know, these are very calculated attempts, in my opinion. Now, they are operating in a huge gray area because, you know, one hand washes the other with the government. They are playing by the rules that are in place, but the rules are fairly loose. They're allowed to sell, as long as they held those shares for more than 6 months or whatever the stipulations are for their specific circumstance. There's really nothing they can do to them for that. That's why a lot of people do like to watch the whales. They watch the insiders because they are going to be the first ones with their nose in the air. They're going to know what's going on. You know, it's like when you're hunting, you're going to look at the birds and see where they're flying away from. And then that's a good time to start looking that direction and maybe consider running yourself. So in this case, you know, you've got millions of dollars. It's not just a blind sell. This time of year is not when people are locking in their tax losses. They're not looking for readjusting their portfolios and stuff. I mean, maybe you could chalk it up to dogs to the Dow. That's an ancient strategy. Nobody's really doing that with corporate portfolios right now.
Right.
So I can't justify it and just say it was convenient timing. Maybe without looking at the statement myself, maybe there's something I'm missing. But
well, I mean, Pookie, you're talking about missing. A lot of people did miss this. You know, like a lot. You know, I come from the NFT and crypto space as well, and you know, the blockchain doesn't lie. You know, if the whales are buying, we know about it. But when it came to this in particular, First Republic, we didn't know about this. A lot of people didn't, because unlike most insider sales with most companies, those at First Republic aren't required to be reported to the Securities and Exchange Commission. Instead, they're reported to the Federal Deposit Insurance Corporation. I know also Silicon Valley Bank executives sold 84 million. That was made the 30 million that was it 12 million that First Republic sold looked like nothing. Just the CEO in general, Greg Becker, sold 30 million of the stock. This is from Silicon Valley Bank. Are they also in the same boat as First Republic, where they don't necessarily have to report all this to the Securities and Exchange Commissions? And if so, how do we as investors, get and I know, like I said, the blockchain doesn't lie. How do we get to know like what they're doing when it comes to these banks?
So this is where the education really comes in, because if you're referring to inside sales, there are still certain conditions where they would have to report that to both. So in this case, it's all about the percentages. If they own more than 5%, they can't just not file that with the SEC, because they would have had to have disclosed that they purchased it initially. So you'd have to know to look back at least 6 months in the SEC filings. And if you look at the First Republic Bank in the Edgar database here, you can see a long list of these 13G amendments. And that's all the insiders kind of shuffling their positions around, buying, selling, reducing, gaining. And that's really where you just got to look close and monitor. A lot of people, a lot of the bigger traders, the more consistent, successful ones, they only follow a handful of companies. And this is why, because you need to be familiar with what they're doing and where to look. SEC filings are required to be disclosed to the public. FDIC filings, they require a little bit more nuance. But if if the percentages exceed the threshold, they still have to report them. But there are exceptions to that, obviously, with the FDIC situation. So, I mean, that's just another thing where they can just kind of blindside people, and there's not much you can do about it.
I know that investors, talking about nothing we can do about it. I know investors are suing Silicon Valley Bank. Shareholders are trying to sue them. I believe that Joe Biden, when asked or was talking about the Silicon Valley Bank collapse and investors in general, he basically said that this is how capitalism works. Investors shouldn't get their money back because they invested in something and the investment didn't work out. And not to get political, but do you agree? Do you think that the shareholders here trying to sue Silicon Valley Bank, do you believe that they should be partially made whole? Because I know those who were not investing, but had their money, deposited, they're banking with Silicon Valley Bank. Of course, their money is insured by the FDIC. That's not the case for traders, but there was insider trading involved, and there's some sketchy business. Do you think that this actually might result in something, or do you think, as Biden said, this is just how capitalism works?
Well, so not to get political, but it relies entirely on the government at this point. So the FDIC stepped in. They're doing their part. There are obviously, for the sake of going down a rabbit hole, there are exceptions to the 250K rule. I think most investors, most companies are going to be fine. The only ones that aren't are the ones who didn't insure, and that's on them as a company. There's things like CDARs and uninsured cash sweeps and stuff like that, where it splits up that money for you within a network and stuff. So it's not limited to just that one bank. So I don't believe a lot of the hype and the fear. I think that's drummed up to drive traffic, and we've seen the effect of it to good impact. Now, as far as the investor side of it, not the FDIC, because they don't care about your stocks. They don't insure those. As long as there have been fair disclosures, and everyone's kind of shown their hand to the minimum threshold that the law requires, there's really not much I don't think investors are going to be able to do. Now, if they can prove that this was a coordinated effort, there was malicious intent, or something was omitted from the shareholders' disclosure, absolutely. And I want to be part of that, but I didn't buy any of the shares, so I can't.
So, but it's like I wish I was, if there is a lawsuit, but if there's not, then.
So unfortunately, I don't, because the money that is lost in the market doesn't necessarily belong entirely to the company. They own the shares, they get the money for it, blah, blah, blah. But ultimately, the majority of that money was probably already given to other investors at this point by the market. That's just how it works. When they halted, that put a freeze on things. But people that were selling off, like if you look, well, I can't look at the stock now, but if you looked at it, that thing was on a solid downtrend for a while, and that hard sell-off happened. That the company's hands are out of the pot at that point. Until that halt kicks in, they don't have a stake in that money. So if people lost money prior to the halt, they can't hold anyone accountable, unfortunately, as far as I'm aware. But I would like to see something happen. And I do think the government has a very fine line to walk right now, because they can either nail them to the wall and make an example of them, because it was very poor decision-making on their part post-2008, or, which I don't think is the likely outcome, I don't think they're going to go against them, because they also stepped in and said, yeah, we back the FDIC. Basically, the feds came in and said they were going to do what the FDIC is already going to do, as a means of reinforcing public confidence. So I don't think they're really going to nail that bank to the wall. But I do see them at least picking one at some point if this continues, just to put their foot down and say, we're still in charge. Don't threaten our currency.
Yeah, make an example out of them, right?
Yeah.
I know if it was a crypto exchange, it would have been a whole different story.
Summer executions.
Well, everyone's talking. Yeah, right. Everyone's talking about, banks, and financial sector. Financials, everything's crashing. But believe it or not, there actually is a sector doing worse than financials or banks this week. Financial sector's down. Well, as of the writing of this article I'm looking at, financial sectors were down. I believe that since then, if I'm actually just looking at even just FRC in general, might have had a lot to do with this. But the financial sectors were down around 5.8% on the week, around 10 o'clock a.m. as of the writing of this article. However, that being said, energy sector was down 7% on the week. Yep, energy. Yep, energy sector was down. I believe I'll look it up on FinVision, because I heard Pookie go, well, so I do have to look it up before saying anything. But as of then, it was. I know we will look it up and see if it's still true. But yeah, energy sector was down 7% on the week. Pookie, you remember Schlumberger? We were talking about Schlumberger at one point.
That's a fun name.
Actually,
I like
that was one of them that took a really big hit. Devon Energy as well, Halliburton, all down around 15%, a whole bunch of energy stocks taking a hit. What do you think is going on with energy? I know everyone's talking about banks, so what's happening with energy? I know, Bull, you seem excited. I think you knew all about this, right?
Yeah, I mean, if we're looking at WTI oil futures, they're down 3% today, and oil's been dropping. So, I'm might be looking for a bounce play here soon. I'm going to keep my eye on the oil charts, see if we can, find the bottom if the selling, stops. I'll probably my interest there. So I'm going to keep my eyes on the chart, but yeah, as of the week, I mean, WTI crude is making lower highs, and we're in a downtrend here. So maybe I'll wait for the break of the downtrend, and then I'll go long on an oil company or something like that. So that's my opinion about that. Oil's basically been selling off all week, so I'll keep my eyes on it, and as soon as the opportunity arises, I'll definitely alert all that to the members.
Yeah, I'm looking at Finviz here, Pookie. It is energy is still the worst on the week, not on the day. On the day, it definitely is financials.
Yeah, energy's down about 7% on the last 5 trading days. So.
You know, if you look at the monthly, though, financial and energy are pushing for that first loser spot at 13.38 with financial and 13.51 for energy. So it should be interesting to see, you know, how both of those sectors do. But yeah, I thought it was interesting. You know, everyone was talking about, you know, banks and all that, and then all of a sudden I was looking at Finviz and I was looking at these articles, and I'm like, oh, it's actually, there is a sector out there worse. Pookie, what do you think about all that?
I love it. So actually XOM, I've been watching a lot of oils. XOM, ExxonMobil, was part of our weekly watch list that we put out on Sunday nights. The emails go out Monday morning, but the site is updated Monday night or Sunday night. Jeez. And yeah, I was watching this key level here, 107.15, and we had a trade to the upside and then a massive trade to the downside. It's one of many, but this was it was a softball pitch play. But if you look at other companies like CPE, I mean, look at these hard sell-offs that we've been facing, and it's due to a lot of things. I mean, there's there's global catalysts. You've got change in season. That's a big one. You've got obviously financial effects, oil and vice versa. Commodities are doing their thing, and it's just it's money harvesting time. I also believe that both these sectors are very well positioned for a rebound. I think shorter or sooner rather than later, but not yet. Right? We got to wait for all the sentiment to wear off and the strength to come back in. We don't want to just try to stop a train by jumping in front of it. But I'm excited. I have a lot of oil stocks and financial stocks that I'm adding to watch list right now because I love a good discount, but I'm not going to be an idiot about it. So I'm just going to wait until it's time. And then I'm going to get some money. I'm going to go out there and I'm going to order some bags of money on the internet. They're going to show up a couple days later, and that'll be that.
You know, order some bags of money. That's the alpha. You heard it here first.
Oh God.
I do want to get into quad witching day, but before that, since I am here looking at Finviz, I'm looking at the heat map here, and I'm seeing a whole lot of red. However, we got a big green here on NVIDIA. And I saw that was also in the news. Have y'all been playing that or know what's going on with NVIDIA? I see Google and Microsoft, also big players, are somewhat green. That's only looks like 1% each. But NVIDIA has a little bit of a higher shade of green on that map. So what's going on with NVIDIA, Pookie or Bull?
AI. So so as we've seen, you know, just looking at the news here, anytime a tech company kind of mentions AI, they get a little spark, right? And if you got proper kindling there, that spark can blow up pretty good.
It's like biotech during COVID, right? And anyone mentions COVID-19, it's like, hey, we have tissues coming out, and all of a sudden the stock's like up 2%.
NVIDIA also got some price target upgrades as well. So we got one here. Original price target was $245 by Citigroup, and they increased it to $305. So that also helps a little bit there as well. But just like Pookie says, anything, you know, if they mention anything AI, there's going to be a catalyst in my book. So
absolutely. And this is also one that was on the weekly watch list. This is such an underrated resource. And these things, they're pretty well spelled out. I mean, if we, let me just pull it up here really quick. Just to show you guys, this comes out Sunday night, and the levels were defined, and you get both case scenarios. If it goes up above this level, if it reclaims it, we take this trade. If it goes below it, these are the expected targets. That's available for everyone. You can bookmark it and just check it out throughout the week, and that's exactly what a lot of us did. So the key level here was 227.26. We saw a beautiful bounce. It reclaimed, blasted up through the first two targets, and then hit this resistance that was called out. Came back, tested this as a support, and then blasted through everything, and it went up to 263.99. But it formed nothing but higher lows the entire time because of that strength that it had. We just needed that little spark to kick it up out of this little choppy range here, and then it blasted.
Yeah, I mean, what a move by NVIDIA. I mean, look at the past 5 months. You know, just in October 2022, this thing was trading at $108.
Yeah.
Now we're up to 260. So quite a bit of a run, and just like Pookie says, it's now broken through some resistance areas that we were looking for and looking at. So I'm pretty bullish on NVIDIA for the foreseeable future. Is it a little extended? Well, if we look at the daily chart on NVIDIA, it is forming somewhat of a little green doji on there, which tells us the buying pressure might be slowing down a little bit after we've just had 4 great green days on NVIDIA. So could be a little bit of selling maybe early next week, or if the buying pressure keeps up and more buyers are still buying, maybe we get some continuation. It needs to go retest the 264, and then I think this stock has a shot at going into the 280.
And
everybody.
and Board is asking, did AMD follow? That's a great question.
AMD, yes.
Yes.
AMD had a beautiful run as well.
Look at
and
that.
Similar to AMD, similar to NVIDIA, this has a good strong RSI, but this one doesn't have bearish divergence right now. So this is a really cool sort of divergence within the strength of these two trades. So if we look at NVIDIA on top with the RSI, we can see that this high is higher than this high, the most recent one, despite the price action going up. This shows that it is potentially losing strength.
Yep.
So I'm personally going to wait for a little pullback, but we've seen nothing but higher lows, so I don't see any reason why it's going to drop below this 245.07. This is a pretty strong resistance level through this choppiness.
That's a great point, though, Pooh, because you can find one stock that that's doing something, and then you can find a stock that usually mimics it or follows it somewhat, and then find a whole different type of situation. When it comes to the charts for that could be a potential play or a potential setup. But I know Bull and Pookie, you're both talking about AI. That was definitely a big reason for NVIDIA's pop. Like we said, anyone talks about AI, they're going to see typically some type of a nice green candle. But Meta also had was talking about AI as well. They were first of all talking about the metaverse, about NFTs. They cut 10,000 workers after scrapping their NFT plans, possibly scrapping their metaverse plans. And the reason being, it seems like Mark Zuckerberg was saying, is that, and this is his quote, is our single largest investment is in advancing AI and building into every one of our products. So he's all about AI. He saw the metaverse, he saw NFTs. He's like, this is the future. We're all in on metaverse. We're all in on these NFTs for Instagram. And then all of a sudden, the bull market or the bear market comes. Doodles NFT, one of a very, very, very prominent NFT project that Pharrell Williams is a part of. They have huge VC backing, around $70 million. They actually came out just recently and said that we are no longer an NFT project. This is Doodles NFT saying we are no longer an NFT project. We don't want to, basically, they said we don't want to pander to NFT, the NFT mentality, the Web3 mentality of building in public and being, transparency over, building. They want to be like what these Web2 or just, every company that is successful is doing and building, the right way, as opposed to just, posting a bunch of stuff on Twitter, which I thought was interesting. Meta is also now, Meta actually did it first, is also backing out of NFTs, possibly the metaverse too. And now AI is their next focus. So what do you think about it? Do you think that this is Mark Zuckerberg just seeing a shiny, almost like Elon Musk, very Elon Musk-esque, but yeah, shiny object syndrome is that like the new thing for all these tech these tech millionaires, billionaires, like Zuckerberg and Elon? They just see AI, they see NFTs, they see the metaverse, they see Twitter, and they want in.
Yes and no. So if you look back through time, Mr. Beep Boop Beep 10101, his original interest before the metaverse was AI.
Okay.
And he was very adamant about pursuing that, but the tech wasn't there yet. There wasn't as much commercial interest in it, which as a business, it makes sense. You're not going to pursue something that nobody wants to buy yet. But the metaverse obviously popped onto the scene, and all the hype around that picked up, and I'm still hyped about that personally, but
I think that he did emphasize that Meta is going to continue investing in virtual reality and mixed reality. I'm really hoping augmented reality will be a big part of that for Meta. I think that they can make a lot of money doing that, because I've seen their commercials, and they have they have weekly shows now, in the metaverse and all that. I know Pookie, you and Prime Patrick are always in the metaverse all the time. You're even streaming on Twitch at some points, I heard.
Yeah, there's some pretty good milsim games. I actually got an app that it's for painting, and you can pass through, so you can see your environment and you can paint whatever you see. You can see the values, the colors you can't see yet for that specific app, but it's pretty cool. The technology's there. I've seen some where they're like, you can just map out your house and you can have your little firefight in your house if you wanted, shoot your cat, whatever you want to do.
Shoot your cat. Okay.
You
You heard it here first, folks.
Saw somebody out in their yard. There was a helicopter flying around. It wasn't a real helicopter. It was AI, but it looks pretty cool. I'm excited.
I mean, I personally am actually more bullish on Meta, and this is not. I haven't even looked at the chart. If you want to bring it up, that would actually be great, and I want to see what your perspective is on this. But I'm bullish on this in general. I'm not talking about the charts. Once again, I'm talking about just this in general. Saying, forget about NFTs. We're going in on AI. We think that metaverse still is the future. Augmented reality still is the future. Those headsets, I do believe that is still a play. I think it's smart to get rid of the NFT. Those 3 letters are just dirty at this point. And I think that any company who is an established brand already, who isn't trying to fight the man, who already is the man, I don't think you really need those 3 letters in there. And this is coming from someone who I'm a very big supporter of Web3. However, I think those 3, the NFTs, the whole PFP, I think that's a little bit overplayed at this point now. But so I'm actually bullish on Meta or on Zuckerberg's idea. But I would love to see, based on the chart, Bull and Pookie, what y'all think about Meta.
Yeah, so I also agree, right? I think NFTs are like the common core of Web3. It's a solid concept, solid idea, but the way it was rolled out was just not good.
No.
So that leads to a lot of distrust, and obviously, corporations shouldn't be relying on NFTs for their marketing because that kind of defeats the purpose of NFTs. So if we look at this was another one that was on the watch list here with the key levels. It needed to break, 195.73 up, or 192.30 down, and it broke up, hit both targets. Right now, we're actually retesting the top of this area of contention. So I think if we hold that, I think we should see some pretty good bullishness. We do have some unresolved price action down here and down here. There's a pretty sizable gap and a contention area. So if I draw this, that's a really hostile area right there. So I think we might see a good reaction off that level if we can't hold these. Otherwise, I'm pretty bullish on it. I mean, if you look to the left here, it's got a lot of unresolved participation to the top side as well. We've broken out of this trend line and we're on our way back up. We got a good solid diagonal support. It's just a matter of keeping it going. Let me redraw that. Sorry.
What do you think, Bull?
Yeah, I mean, I have some a longer term view, technical analysis wise. I basically drew a fib extension to the downside from the high of September 2021 when it was Facebook at the time, but when I hit $384, sold off all the way down to $88. So a pretty significant drop there. So I just drew a fib from that high down to that low to 88. And it definitely looks bullish. It's broken out of the longer term downtrend that it was in. So we are officially out of that downtrend. That's been going on since September of 2021. So now that we're out of that downtrend, I mean, I'm definitely bullish long term. I think if it can get above and hold the low 200s, I think this has a shot at retracing 50% of that fib. Back to the 230s, probably longer term. This could take weeks or months. But I definitely think that that's possible. And like I say, the beautiful thing is we finally broke out of that downtrend we've been in for a year and a half now.
A while, a little bit.
Glad to be out of that. So maybe now we can look for some bullish opportunities on Meta, and that's what we've been doing, as Pookie says. So
there you go.
You want to know what I like about this chart is the word confluence. So we've got
you and your confluence. I love it.
It works. So we've got this big Fibonacci retracement, and for those who don't know or use them inappropriately, they are not a buy and sell indicator. It is a measurement tool, so you can measure the pullback after an impulse to judge the strength of it, the quality. But if you look at the 61.8 to 50% range right here. Okay, I know I got a lot of lines here. I'm sorry. And you look at the price action there. There's a huge gap. This is the bottom of that gap right there after that hard sell-off on earnings there. So if you remember the earnings sell-off from February 2022, we could just as easily fill that gap relatively short term. It just needs to go. It's definitely primed for it. It's been riding the support line. There's a lot of participation here on this support line. But as soon as it pulls away from that and gets some steam and gets some sustained volume, I think this could easily push over 270 back up into the 300s. But again, that's time frame we can't control. Yep.
I love it. The swinging bull is bullish on swinging meta, it sounds like. So we do have 8 minutes until market open. That is when you can, or market close. Sorry, yeah. It's Friday, as Vicky keeps saying.
Let's get ready for the weekend.
Yeah, right.
How's Spy doing?
We should do maybe next week. We'll like arrange like a happy hour post party or something in the lounge area off of YouTube.
We also have a recovery section for those who don't.
Yeah. Well, everyone knows what happens when I drink on camera, or Nikki does, and some of the OGs here. But that's what Dogfish Head 120 does to you when you think it's 60. But anyway, we got around 7 minutes now to market close, and that means that your options contracts, if you want to close them out, this might be the time to do it. Speaking of which, Pookie, you were telling me all about Quad Witching Day. So happy Quad Witching Day, everybody. Quad Witching, which is a thing that only happens on the 3rd Friday of March, June, September, and December. So it's like a werewolf type thing, or like the like a blue moon or something. Yeah.
Every third month, every third Friday of every third month.
Right. And that is when stock index funds, stock index options, and single stock futures outside of the US simultaneously expire. So that is my like Investopedia explanation of. So Pookies, what actually is quad witching? How do we as as investors, and Bull, you as well, how do we use this to our advantage? What did we see today, when it came to quad witching? Was there any reactions that we could have in retrospect taken, and then maybe in 3 months time take?
A lot of investors look at quad witching as kind of like a quad witching week. I know it's one day, which is today. But the bottom line is all those futures and options and all those sets that expire on the same day. The problem is traders have to close those out or adjust the positions. Okay, so that's it's something that has to be done. And usually the week leading up to quad witching day is usually bullish. And if you look at the daily chart on SPY, the past 4 days this week have been green. So that's the bullish move leading up to quad witching. And then what happens is on actual quad witching day, which is today, it's usually bearish. And that's in today. We're working on a pretty good red candle today on the daily. And, SPY's down over 1% right now. So kind of lines up with what the trends have been over the years. So we actually did a lot of bullish plays earlier in the week that paid off very nicely. And today I actually alerted a bearish play on Apple, which was a call credit spread, and already up 4% on that. I'm just going to hold that over the weekend because I do think there could still be some selling going into Monday, and then I'll probably take profit then. But we definitely took advantage of the trend of quad witching. The week that leads up to quad witching. Like I say, we had tons of bullish plays alerted in our Discord. And then, of course, we had some bearish plays alerted today that did fantastic as the SPY's down over 1% right now. So, that's the trends that we took advantage of for quad.
And that's why I was very, very adamant this morning when I did my live trades. Every Friday morning, I do a live trade on this cash account. This week I reduced it down to $500 because members were like, I don't have $1,000, and that's okay. The same rules and concepts and habits apply. So I traded with 500 instead of 1,000. And I insisted from the very start of the stream, I was only going to be looking for puts today, not calls, but I would not blind myself to call opportunities because those are the ones that burn the puts and the shorts. So it's good to be able to identify both, but I was only ever going to take puts today. And this is why. So market open, traded the put down off the support line, didn't hold, so we exited. I was very clear about as soon as it hits the line, I'll see what it does, and I exited that position. Just as I said, if it doesn't fall down more, I was just going to lock in those profits. First half hour, you got to be very careful. Traded again, got a profit, and then since I was sick, I was actually walking members through the impact being sick has on your trading, and I did a goof, and I accidentally exited my entire position instead of locking some profits. But that's okay because it was a good demonstration. And the play there that I was in, it was a pretty aggressive position. I took it here and I held it on purpose to demonstrate what happens when you hold, especially on a Friday morning. Ended up being rewarded for it, but I cut my profits short and that was okay. But that was the play right there all morning until lunchtime.
I like that play that you just said, Pookie. Another easy thing that we were doing today is that we basically just bought into puts every time we got rejected off of VWAP. There was quite a few opportunities to do that today. But that play that you did earlier, that short play was fantastic, man. I'd like seeing that play out, and it was a great play.
Yeah, it was pretty good. We had a good support level here. It failed, and it just kept going. And then obviously I wasn't in it down here because I messed up and exited my position. Yep. But that's okay. It's a good day to not expose yourself to a lot of risk, especially when there's this kind of choppiness.
Trade light on Fridays. No reason to give your gains for the week back to Mr. Market.
No. Yeah, they're yours. You earned them. You earned the money to put in there. You work hard. You don't just give it away. Don't give it away.
And now we go celebrate.
That's right. And Spy's right back in this contention area.
Pookies or Bull, do y'all have any swing trades that y'all are in that are close to entry that you are holding on to for the weekend?
Go ahead, Pookie.
I do. Pegs, actually, PAGS. So this one, we alerted it for our premium members here. We got some good potential setup here for a wide segmented double bottom. It's a bit of an earlier entry, and that's okay because I plan on adding again if it drops down to, I believe the level was 755, but that's my personal play. The entry here is just 783, I believe it was. I should probably mark that on here.
So 783 entry. It's now at like around 792. You said, or it looks like I can't see really.
Yeah. Sorry, it's 791, 792.
Okay, so it's a little bit above entry, but you're actually expecting to go down from here before like really securing your position.
Potentially, I'm only doing a 50-50, so it would be good for a single buy. That's the approach we've been taking since January. Is just one buy, no averaging down. I'm personally going to average down just a little bit, just above the stop loss. That way, if I'm wrong, it hits the stop loss. I'm not going to lose anything. But I'd like to get my average lower. Otherwise, it doesn't really matter. It's a pretty tight stop loss considering. And the target on this,
really quick, where is that stop loss for those listening? Where is that stop loss?
Oh, I apologize. It's below 748.
So anything like 748, you're just like, see you later, bye.
Yeah, just a couple cents below the 750 mark. I'm not going to try to play specific levels or anything. I just want a little bit of an offset.
Gotcha.
Same with the 755 because I believe it may come down, tap 750, and then come back up. At which point I just want to place that last little piece. Totally unnecessary. I don't have to, but it's just a little way to squeeze out a little more profit.
And really quick, because before we get into targets and like the possible success, I want to see why you got into it. So what is it that made you decide to like to pull the trigger on this one? I know you briefly just said this is for the members, so they know like what kind of setup they might be looking at when they are entering it, so they're not just entering blind.
There's the closing bell, folks.
There it is. So for that, let me pull up this chart right here. So I'm just going to erase the lines, and I'll show you exactly what I'm looking at right here. This is the ideal setup for a double bottom. A double bottom is any trade where you have a leg, level, and then ideally some sort of segmented midsection that holds on for a while and then comes back down, retests that level, and then bounces, and it breaks over the neckline. So the traditional entry for these is above here. It's above that little neckline. But in this case, we had good volume at both of these visits, these approaches here. That shows contention. That's where you want to see the volume on a double bottom. And it's got, oops, I'm drawing extra squares here. What's up with that? And then, the high segmented midsection means that it's got bullish pressure on it. It's just not enough to break up yet. So it's got to come back down, resolve this level here, the 750 level. And then if it pushes off there, I don't see any reason why it shouldn't shoot up past $9, $10 pretty easily, because there's a lot of room to gallop here. And that's the other element there. There's a lot of risk reward, which now we'll get into targets.
Let's do it.
So my first target's this level of contention right here at 920. It's just over $9. So if you're shy, you might consider selling some a little bit before the $9 mark, just in case you're not confident, or at least moving a stop loss up at that point. And then my next target's 1023. Those are relatively short targets for a swing. Ideally, I'd like to see this over $12, but that's my personal want. It's not what I expect a trade to do.
You said the first target's $9, and I know that's like a dollar move. Let's just say it gets to like $8.75. Are you taking a little bit of profits there, or are you just riding it up to $9? I'm
going to ride it out. If I see higher lows, then I'll move my stop loss up. And for that, pull up the right chart here. Open.
And then
anyway, I guess I'll just redraw it. So
you like trying.
Yeah. So what I'm looking for here is a validated low that is higher than the previous validated low. So in order to see a validation, I got to see a candle, right? And then I got to see at least 2 candles to the left and 2 candles to the right, which fail to get as low as that candle. That's how I know that a low is validated, which also means I can't see a validated low until at least 2 candles later. And that forces me to wait rather than trying to anticipate the bottom until it actually validates, which is why this is important, because it tells you not to chase on the way down. So if I see a higher,
because we can't tell the future, right, Pookie?
no, humans suck.
I know there's a lot of influencers out there in the trading space who can tell the future, apparently. But
yeah, if anyone
we
tells
wait.
you that, yeah, tell them talk to me, because I would love to know their secret.
Right.
So would all the major banks in the world.
Yeah, especially Silicon Valley.
Yeah. Oh man. They did not get a heads up.
Well, apparently they did know the future. They sold pretty early all their shares. So
yeah, fair enough.
All right, so back to the double bottom, or the
Yeah, so for a trend, right, a downtrend into an uptrend, we see lower highs, lower lows, specifically a lower low and then a lower high to confirm it. For an uptrend, we got to see a higher high and then a higher low and then a push. So this candle right here is at the bottom of that. That's a low. Whoops, I'm drawing more squares again. So this is a low. That's a low. So this is where I want to see those patterns. And as soon as I do, and I see it push up after that, that's when I move my stop loss up. So let's say that my stop loss was here. When I see a higher low, like this one form, I'll just move my stop loss up, because in theory, this price level is resolved and it's had enough bullish pressure to not only say we're not going to let it go as low as it was, but we're going to continue to push it higher. So it shouldn't come back down to this level. And I don't want to be in it when it does, because if it fails that level, it's no longer a higher low at that point. Same with this one. When it pushes up, I just want to move my stop loss up. And that allows me to let things breathe and move my stop loss up to minimize my risk. So we also have these impulses, and these are where we like to lock in some profits. So this is the difference between active and passive profiting. So active profit locking is when you see an impulse, you see it start to slow down or maybe even reverse a little bit. It's just the opposite of this. It's when you see an isolated high and then it starts to pull back. That's when I lock in smaller pieces of my position, just so I can lock in profits after those big impulses. And everyone's like, oh, you picked the top. And I'm like, no, I didn't. I just waited till the impulse stops.
Because God forbid it doesn't go back up from there.
Yeah, exactly. Why would you give up those profits when they're there? It doesn't have to be the whole position. You can break it up and scale out. But just doing little stuff like this and using appropriate position sizes can make a world of difference. And it's something not a lot of people can do because they just don't know. So that's why we're here. We're trying to teach people how to maximize their risk exposure to the healthiest extent. So as far as the targets and stuff goes on PAGS, P-A-G-S, once I see, like right here, you can see that there's a nice little double top there as well. Once I see a higher low, like in theory, we should see a push, a pull, a push, a pull, a push, and then probably a big run. I'm just going to move my stop loss up on each of those lows in this scenario until it just continues to go up. And then that way, it doesn't have to get all the way up here to $14 or whatever. I could just take it up until it stops going up, and then I have locked in profits without really having to do much other than just watch it.
So that's if it does go up, does work out. Let's just say, like we were saying, because your entry around like 790, 780, 790. Yeah, and the target at around $9. So let's say it goes up to like around 850. Then where would you lock in all your profits for a profit? Like what kind of scenario? Would it just be strictly not finding any more higher highs, higher lows? Would you just then sell everything, or like how do you determine when your trade hasn't hit target but it's time to exit for a profit as opposed to stopping out? Because everyone knows, stopping out is just, goes down to a certain price, you stop out. But how do you know when to secure your profits on a trade that is actually doing well but you might think isn't going to do well or isn't anymore doing well?
Position size management.
Yeah.
It's position size management. So I almost always lock in at least 75% of my position at the first target because I want to secure the bulk of that and get that risk exposure off the table. That's the safest way to trade for me because I know myself. But I always try to lock in the majority of my position because that means that the remaining 25% can then fall all the way back down to break even and then go 3 times that distance down before I break even and lose those profits.
Pookie, I guess I'm saying, what if it doesn't hit your first target, but you're still in the green? And like, what kind of scenarios would you would you need to be in order for you to completely exit out of position in the green before it even hits first target? So people don't let, like, let's just say my target's 10%, right? It goes up 7%. And I see something that, I think it might go down from here. Would you sell there, lock in your 7%, or let it go back down to 0%? Because I know a lot of traders, they see, their stock goes up and they're waiting for profit or their target. It doesn't hit the target. Then it goes back down to entry. It's like, oh, shoot, I should have just at least just take my 5 or 6 or 7. How do you determine when it's okay to sell your position, before it even hits that first target? And what, between that and, without it being too early, I guess, and just exiting a good trade.
I gotcha. So the best thing you can do in that situation is not cling too tightly to specific numbers. You have to treat these as ranges. In my case, I'm good enough selling at around $9, right? $9.20, $9.50. I don't really care too much about the specific cents. I know $9 is a psychological resistance level, so I'll start to watch that area a little more closely. If it falls back down around $9, I'll lock in that 75%. If it goes above $9, I'm still going to lock in that 75% at $9.20. But if I see a higher low, I'll just move my stop loss up from there and not have to worry about it. Because if it falls back down again, I don't want to have lower lows if I'm trying to catch something on the way up. I can always secure the profits or the small loss and re-enter when it's a better opportunity. The levels aren't going to be invalidated. So I'll just have to look for a different setup and use those values from there. So if I see a higher low, I'll move my stop loss up once it starts to push up. Whether that's above my break even, below my break even, it's kind of irrelevant for me because I'm just getting in and out of the trades. If it doesn't hit my first target, but I see a higher low around like 875, I'll move my stop loss up and that'll be that. And then it'll just compress between there and it'll break up or break down and I'll lock in those, that piece. Now, after I lock in that 75%, then I typically just sell about 20% of what I have left every time I see a higher, an impulse after a higher low. So at that point, say I've got 100 shares, right? If I sell 75 of those at first target or around first target or when I see a higher low, my bottom stop loss here is going to be for all the shares. I'm not going to try to hold on to any shares unless I'm trying to build it down, which we're not. So once the stop loss is hit, that's it. But on the impulses, I can sell pieces, and that's where you can get really good at letting stocks breathe. So if I sell 75% of my, or 75 of my 100 shares here, that'll leave me with 25 shares. 20% of that is 5 shares. So next time I see an impulse, I'll sell 5 shares. That'll leave me with 20 shares total. So I'll sell 20% of that, which is 4 shares on the next impulse. And I'll just reduce that down until I get to my last little piece. And then that's, a good number of impulses and a good number of profit. But the important part is that I'm moving my stop loss up all the time, so I can always lock in the profits, and that I'm selling positions at the ends of impulses so that I'm maximizing that profit potential, letting it breathe and choking it out to the downside, because I don't want it to go down. I want it to go up. So hopefully that makes sense.
Yeah. And it is Friday. I know we're at the actually 10 minutes over for the stream, and I know Bull. I see you sitting there, Bull. You're ready to call it a day.
I'm tired, man.
Y'all have fun? Any fun plans for the weekend?
Relaxing by the pool.
There we go.
Well, tomorrow, there's a lot of places celebrating St. Patrick's Day today, but there's also some St. Patrick's Day celebrations tomorrow. So I might go out in town tomorrow, maybe. But other than that, probably Sunday, just relaxing, man. Mental health break to get ready for the trading week next week, right?
Absolutely.
It's
Don't
like
be a slave.
It's like it's like quad witching. How you were saying it's quad witching week. You're going to be doing St. Patty's weekend.
Yeah, exactly.
That's the way to do it. No, and I hope everyone listening has a great St. Patty's Day. Obviously, drink responsible, la-di-da-di-da, and all that good stuff. Oh, I guess yes. If anyone does need help, we do have the recovery channel. I keep forgetting we're also we also have the Never Alone recovery going on as well. But for those of you who who don't struggle in that aspect, I hope that you'll have a great amount of fun kicking those beers back and enjoying St. Patty's Day. For those of you who aren't drinking, you can have as much fun. It's all about
Shamrock shakes,
companionship, and there you go, Shamrock shakes. I love it. Yeah. But yeah, anything else from you, Pookie or Bull?
Be safe, guys.
You
got to take care of your mental health as well as your physical health. So, no, just be careful. Enjoy your corned beef if you eat that stuff, and then. Just don't become a slave to the market. We trade so we have more opportunities to live life and to support ourselves, not to trade more, right? So the goal is to be efficient and organized. So
once it stops being fun, it's like, what are we even doing then? Like, the whole point was to get out of a job, get out of the 9 to 5, get out of the the life we didn't like. So if you go and then turn that into, and go turn trading, which could be a positive thing, into something negative, which is something you're not enjoying, is something stressful, you're overthinking it. Like you're 100% right, Pookie. It really, mental health does matter, and your emotions do matter in trading, which is why it's so important to take a break. Have fun, as Board said, have fun trading. It's not a marathon. It is a marathon. It's not a sprint. Enjoy the ride. And I hope that everybody listening makes some bread next week. And we obviously will be seeing you before right at market open, I believe. So we'll see you then.
Oh yeah.
Have a good weekend, everyone. Cheers.
Bye.